ICRA has retained its portfolio growth estimate for housing finance companies at 8 to 10% in FY 2022 and projected a 9 to 11% growth for FY 2023. The credit ratings agency, however, increased its estimate of reported gross non-performing assets to 3.6 to 3.8% as on March 31, 2022 compared to earlier estimate of 3.3 to 3.6%. Thereafter, some recovery is expected in FY 2023, with GNPA estimates of 3.2 to 3.5% as on March 31, 2023. ICRA assessed that asset quality pressures are likely to keep credit costs high and profitability moderate in FY 2022, similar to FY 2021, but expected to revive to near pre-COVID levels in FY 2023. The agency noted that the second wave of the pandemic impacted disbursements of HFCs in Q1 FY2022. However, the same was followed by a sharp recovery in Q2 FY2022. The on-book portfolio of non-banking financial companies housing finance companies in India is estimated at 11.6 Indian rupees lakh crore as on September 30, 2021, registering a year-on-year growth of 9% in H1 FY2022. ICRA said, going forward, the growth trend is expected to continue driven by healthy demand in the industry, increasing level of economic activity, and increasing vaccination in the country. There would, however, be downside risk in case of significant disruptions caused by the new wave of infections in Q4 FY2022 or future waves, if any. Further, the measures taken by the regulator to strengthen the structural, regulatory, and supervisory framework for the NBFCs, especially the tighter non-performing advances recognition/upgradation norms, could lead to increased focus on internal controls, which can, in turn, also impact sectoral growth. Sachin Sachdeva, Vice President and Sector Head, Financial Sector Ratings, ICRA, said, given the last 3 years of moderation in growth, the pent-up demand is expected to help the industry witness growth in the portfolio in FY 2022, with the trend expected to continue in FY 2023 as well. However, this would be subject to the impact of the ongoing third wave. Nevertheless, initial trends, as discussed with industry players, indicate limited impact of the third wave on the industry's operation. As for the gross NPAs, the second wave of infections and the prolonged weakness in the operating environment challenged the recovery since Q3 FY 2021, which led to a decline in collection efficiency and hence deterioration in the asset quality metrics in Q1 FY 2022, ICRA said. Nevertheless, the industry saw a sharp recovery in CE in Q2 FY 2022, and the gross NPAs reduced by around 50 basis points in Q2 FY 2022. The agency observed that the stress on cash flows of borrowers caused by the pandemic also renewed the demand for restructuring, and the industry's outstanding restructured portfolio increased to around 2.3% of assets under management as on September 30, 2021 from around 1.1% as on March 31, 2021. ICRA expects the restructured book to reduce slightly, driven by recoveries and slippages, to around 2.0 to 2.1% of the AUM by March 31, 2022. Though the continuing improvement in CE augurs well for the industry, we expect the asset quality metrics to remain weak in FY 2022 given the relatively sticky nature of GNPAs in the sector, expected slippages from the restructured book, the third wave of the pandemic, and the impact of tighter regulations regarding upgradation of NPAs, Sachdeva said. He observed that optimistically, if the collection efficiency trends post a steady and healthy revival and if slippages remain contained, then HFC's profitability may also benefit from reversals in provision.